Here we're going to take a look at a cash basis company. All our projects in this class are basically accrual basis, meaning that the company records revenue or records sales when it actually either does the job or delivers the product. With a cash basis company, we are recording the sale when we receive the cash, which could be a very different month than the accrual basis. Likewise, the accrual basis company records expenses when they've actually used the items and or have incurred a bill. So when we receive the electric bill, that's when we're going to record utilities expense, even if we're not going to pay it then, and we credit accounts payable. So that's the accrual basis, which is GAAP, which is required for public companies, and also if you have bank financing that requires you to do GAAP. So most companies are going to have to be on the accrual basis. But there are some small private companies that are going to be on the cash basis, meaning they record sales when they actually receive the cash, and they record expenses when they actually pay the cash. And these small companies might, in fact, run their whole company out of a check register. They just keep their check register and they're just punching stuff in from the check register into the account. They don't have accounts receivable, they don't have accounts payable, they don't have to deal with all those windows. So let's take a look at what that looks like. Here we would create a new company, and we're going to call this XYZ company, and we're going to say that this is a sole proprietor. Now, in the past, we have used our own chart of accounts. That's because we have our own set of account numbers. We don't have that many accounts. It's just easier just to do it that way. But you can, and we're going to do it this time, we're going to use the sample that matches your company. Now here they have some basic types, and if we're a service company, we can just leave it on that, and over to the right it would show what our chart of a company accounts looks like, and it has all numbers already made up for it. Okay, then, or we can choose some detailed types. So if we're going to be an accounting agency, not just any old service company, but a service company that does bookkeeping and tax returns and that sort of thing, then we would want to choose this detailed type, and it gives us a chart of accounts for that detailed type. There's all different kinds of detailed types: taxi cab services, shoe store, etc., etc. Okay, so we can either choose just a basic type, a basic service company, a basic retail company, which is going to sell products, a basic manufacturing company, which makes and sells products, a distributor, which is similar to retail but is more like a wholesaler, a construction company, and they have their own ways of doing accounting. Okay, so for right now, we're just going to choose the basic service company, and we'll say next. We're going to choose a cash basis. Notice that it's typically bubbled on accrual, and normally we use that, but for this next set of projects, we're going to use the cash basis. Note on the bottom, this cannot be changed after your company is created. So once you say cash basis, that's it. Or if you accidentally set up your company as accrual basis, then you can't change that. Okay, here's our posting, and we always use real-time posting. And we're always going to use 12-month accounting periods as well. This says, what is the first period of the fiscal year? For the most part, sole proprietor has to have January be the first period of the fiscal year. This is not the first period of which you're doing transactions. It's the first period of the company's fiscal year. Also note, this cannot be changed. A lot of students make the mistake of saying, oh, we have to put in September transactions, so let's change the first period of the fiscal year to September. No. This first period of the fiscal year is still January, just because your transactions are in September. And we hit finish, and it sets up our shell of our company, and then we can begin to do some transactions. Okay, so now we have XYZ company set up. The first thing that you're going to want to do is to make sure that the chart of accounts is how you want it. And so we're going to go to banking, to the chart of accounts, view and edit accounts. And here's all our accounts, and they're all set up. There's no beginning balances on here yet. So let's say that we do not have a cash on hand account. So I can double click on that, bring it up, and hit delete. And say yes. Okay? And close. And that just took that out. Now let's say that here's the checking account, and I want to call that cash instead of checking account. Or maybe I want to call it regular checking account because I'm going to add payroll checking account or something like that. So I can double click on that. I leave the account ID the same, but I'm going to go ahead and call it regular. I can just change the name. And then I say save. Okay, that changed the name. Now maybe I want to add a payroll checking account. So I need to go into new, and I need to give it a number. And so generally the payroll checking account is going to have a number that's below the regular checking account. So I'm going to say 1050. And I'm going to call that the payroll checking account. Okay? Now, that's still part of cash. That's a cash type. And so I can leave that there and say save. And I can close. Now, for your next project, you're going to be doing this, and you're going to be adding, subtracting, and changing a variety of accounts, okay, until you get it to the way that you want it to be. Now, let's say that we are going to do this as on the check register. Well, I have to have my beginning balances in there, and so I'll go into my account beginning balances, and I want my transactions, let's say, to be March of 15. And so my beginning balances are going to be put in for February of 15. Okay? And let's say that I have $12,000 cash and let's just say that's all I have, and I'm going to put down, you have to have a retained earnings type account. That's my capital account, so I'm going to put the $12,000 credit there. Okay, my trial balance is out of balance 0. My debits and credits are equal, so I'm going to say okay. Okay, all right. Now I'm going to go into my check register. Now notice that your period is on the same month that we are now, even if it's on a different year. We're currently in April, and so this is showing up as a period of April. I want to put a transactions in as of March. I'm going to go and change this to March. Okay, and once your period bar equals what you want it to be, now you can start putting transactions. This is a large problem with a lot of students not checking and making sure that period bar is what it should be. So we're on the banking window, and we're going to go into the check register, which is the account register. Now you have to say up here which cash account that you want to do, and it's on the payroll checking account, but we want the regular checking account. Okay, and here it is. The March 1st balance is that $12,000 that we put in. Now we want to show a deposit. Let's say that we have a deposit of $3,000, and let's say it happens on the 3rd of March. So we would change the date to the 3rd, and then we get over here to the type. This is made up of 2 rows. The first row is this top stuff here, and the second row is this stuff, and the second gray bar. Okay, and so here I have this. Now let's say that you don't show 2 rows. You only show 1 row. Okay, what should you do? Okay, you should go into Options and Global Options, and you go into this General tab, and you need this 2 line to be on here. Okay, and you would say okay. Otherwise, you're only going to see 1 row. Okay, so again, this was the 3rd. Let me maximize this. And you have 2 choices. Either we're paying money out, we're writing a check, or we're receiving money. So a deposit means we're receiving money. So we say receipt. Okay. This next row over here is who is the payee, and we don't have any payees set up yet. You can set up payees, and we're just going to say that we received it from ABC Company. Okay, and that payment is nothing because we don't have a payment. So we hit either enter or tab, and we go over here to receipt, and that's what we've received. And so we said with it we received $3,000, so we put that in there. Now we're on the second row, and it skipped these first 2 things because there's nothing there, but the bottom is the reference. So if we received a check, what check number, ABC Company check number, did we have? Okay. Then we're over here into GL account, General Ledger account, and that's saying what is the account that you're going to credit. Okay, we know this $3,000 is a receipt, therefore we're going to debit it into the checking account. What account are we going to credit? And typically when we're receiving money, it's going to be a sale. And that's what this is. Professional fees is our revenue account. Okay, so typically we're going to receive rent. When we receive cash, it's typically from a revenue. But it could be that we went to the bank and got a loan and we received cash and we need to credit notes payable. Okay? But most of the time, if we're receiving cash, most of the time it's because we sold our services or our product. Okay? So we're going to leave that on $4,000, but we could have changed it if we wanted to. Okay? This next thing is a memo. If we wanted to say a memo of something, the sales ticket number or something like that, okay? Then there's nothing here on the bottom of this one. So sales tax, whenever we sell something, we might have to charge sales tax. Now typically we're charging sales tax on products, not on services. And so typically we would not have a sales tax on this particular receipt because it is a service. But if I did have sales tax, then I would punch in that sales tax right there, and it would know to put it to the sales tax account, sales tax payable account. So I don't have any, so I'm going to click this Save button. Now I'm down to the next row. Notice that my new balance in my check register is now $15,000. Now let me put in a payment. So let's say that on the 5th, I wrote a check out. So that's a payment. So I'm going to just leave that on payment. Okay? Then I'm going to go to payee. Who did I make this payment to? So I'm going to say Mr. Landlord. Okay, now it goes to the payment amount. Let's say we had to pay $2,000 for rent. It's not a receipt, so I'm just going to press enter again. And now I'm down here to reference. What check number did we write? Okay, so let's say we wrote check number 987. That's our reference. Okay, the GL account, once again, we have a $2,000 payment, so the program knows to credit cash. It's asking us, what are we going to debit here? Okay, so this is to the landlord, so we're going to debit rent expense. So we need to find a rent expense. Here it is, rent expense, $6,300. Okay, here's a memo. We can say that that's for March rent. Okay, and I pressed enter, and it automatically, that caused it to save. There's no sales tax, of course. When I'm paying something out, that was sales tax for receipts. Okay, so I just saved. And notice that it took the $2,000 away from the $15,000. I now have $13,000. Okay? Let's say I have another payment. Okay? This is on the 6th. Okay? This is to the utility company. Okay? And this one is for $300. And this is check 988, the very next check. And what account is this going to go into? Well, of course, this is going to go into utilities expense. Okay. Here's utilities expense. Okay. And we're going to say this is for March electricity. Okay. Now I have $12,700. So you see how that works. This is very simple. You're just putting all your deposits and all your checks in on this one screen. Alright, so now we can go ahead and close that out. So I can do my reports. I can have an account register, and that shows my account register, my beginning balance, and the deposit, and the checks that I paid out, and my ending balance of $12,700. For the next project, you're going to have to do an account register for 3 months in a row. Okay? And you can save that, of course, as a PDF or as an Excel and send it to me. All right. Now, let's say that we have the bank statement in front of us, and now we want to reconcile this checking account with our bank statement. Okay, so we're going to press this button here, reconcile accounts. Okay, I have to say which account do I want to reconcile, and I want to reconcile the regular checking account. It brings up all my stuff that I have in there, and I look on the bank statement and I say, oh, yes, the bank statement shows that this deposit was put into the bank. Okay, and yes, this check here for $2,000 for Mr. Landlord, that was cleared on the bank statement. But this $300 check did not clear the bank statement. Okay, so I'm not going to check it off. I'm just going to leave that little white box there. Down at the bottom, I have to press this little up arrow thing here, and that brings up the rest of that screen. Interest income, if my bank gives me any interest income on this bank account, then I can put that in there. That's not very typical right now to get interest income on bank accounts. If I have to pay a service charge, which is typical, I would put that here. So let's say that I had to pay a $10 service charge. So I would put the $10 here. I would put in what date on the bank statement do they take the service charge out of my account, and put that date in, and then I have to say what account am I going to use for the service charge. So that's going to be an expense. Here we go, service charge expense. Then I have to put in, over here to the right, I have to put in what balance does the bank say that we have. And so the bank says that we have $12,990. Okay? Notice that our GL system, that's our book balance, is $12,690. Well, wasn't it $12,700? Well, yes, it was $12,700, but then as soon as I put this $10 service charge, it went ahead and did a journal entry for that and took that $10 out of my checking account. So now it went from $12,700 to $12,690. That's my book balance. My bank balance is $12,990, and there's outstanding checks of $300, this check that I didn't clear off. So my unreconciled difference at the bottom is 0. That's what you want. Now I'm going to go into reports, and I want my account reconciliation report, and this shows my beginning balance, my cash receipts, my cash disbursements, my ending GL balance. Oops, wait, I'm sorry, this is the account reconciliation. We haven't pressed saved here. Here, for this, before I print out my report for account reconciliation, I have to say OK. And now I will go to reports and say my account reconciliation. All right, here is my beginning balance, my cash receipts, my cash disbursements, and that extra $10 service charge that was taken out. So here's my final book balance, $12,690. Okay, now it's showing my bank balance. Ending bank balance is $12,990. I have less outstanding checks of $300. I don't have any deposits in transit, so there's no number there. And so $12,990 minus the 300 outstanding checks is $12,690. That's my ending bank balance, which now equals my ending book balance. And I would save this as a PDF. So your next project, you need 3 account registers and 3 account reconciliation reports, where you should have nothing This unreconciled difference needs to be 0, or that means that you did not do it correctly. Okay, if I go back into my account register, notice that it put that $10 in there. And here's the $12,690 final balance. Now, let's say I want to go on and move on now to next month. So I'm going to hit this period bar, and now I'm going to move it down to April. I'm going to say OK. It's going to ask me some questions. Would you like to print your reports? Well, of course, in real life, you are not going to move on to the next month until you print all your reports out, hard copies, because you never know when a computer's going to crash. You do not leave reports just being electronic. You're going to print those out. Okay? Here, we're not going to worry about it. Okay? This is asking us, do we want to do an internal accounting review, which is like a little audit. It's going to check all our balances of stuff, compare it to last month and stuff like that. Make sure that we don't have anything that looks kind of funny. And if we had anything funny, it's going to let us know. Okay? We don't need to do this for this project either, so you can say no. Okay? Now my period bar is on April. I'm going to go to my account register. Notice that my April 1st opening balance is $12,690, the same as the ending balance of March. Now I can just go ahead and put in April transactions, my April receipts and my April payments, and do my April bank reconciliation. And then do my April reports. This is in the project that you're going to do. You're doing October, November, and December. You're going to start out with your setting up your company as a cash basis company, and then you're going to and change your chart of accounts, and then you're going to put in October transactions into your account register, get that report, then do your October bank reconciliation, get that report, change the period to November, do your November stuff, change the period to December, do your December stuff. And so you'll have 6 things to send to me.